Okay, this is GLD, that's the monthly. I choose to begin reviewing the precious metals section here with this chart. This is, I would say, the most bearish view that I can think of for gold. It is possible, although I do not necessarily think that it is the best option at this point. We do need further confirmation, and short term it definitely doesn't look like the very best option. That is showing you the monthly going back into 2005, and we all know that in fact the rally in gold started way back in 2002. It was forming a base in 2000, 2001. So you are not seeing the full picture here. However, when it comes to the descent since the previous top registered in 2011, we definitely have something to go by. We are looking at potentially 1, 2, 3, 4, 5 that could yield the A. Okay, that would be your A, B, C, meaning you are going to take the rally since December last year as a 5-wave run. Fair enough, but this is not going to be an indication for the market to continue higher, but rather an indication that it completed an ABC, which in itself is very bearish. Okay, an ABC that relates to the previous run of 5 waves is very bearish because it projects now a huge C down. And this is a projection that would see gold collapsing substantially in the next 2-3 years. And the first very serious indication that this is indeed is taking place would be a break of 1000. You can see the break of the December. Well, it closed, I think the low was 1040 or something. So it's got to break that in a massive, yes, massive collapse under this would likely suggest that this is the scenario that should be taken as the best scenario going forward. Okay, and you can see it's going to be absolutely devastating. It is going to be almost a replay of what we have seen from 2011 to almost the end of 2014. So you're going to have about 2 or 3 years of real misery in the precious metals, and it will go down. I think it's going to crack towards 70. This is almost certain, because that is the next major support level, is around 670, 700. Okay, 670 to $700 around here. But if it were to go for equality between the A and the C, it's going to go as low as 550, 557. Yes, you have to multiply this by 10 GLD in order to find the price of the spot. So you're talking about 557. That's a long, long way. A long, long way. It's cutting it by more than half its current value. So that's going to be... it's almost difficult to imagine how it's going to be now, because it's been already in this range for the last 1, 2, 3, I would say almost 3 years, more than 3 years. It's been hovering at around 1040 to 1300. So suddenly breaking 1000 and going to under 700 would look like absolutely completely different world. Okay, but this is the most bearish scenario. I told you we need quite a lot of action to confirm that, and short term a lot of other options are still possible and viable. This is the weekly now, and the seriously negative signal that emerged this Friday is the fact that it closed under the 50 moving average. I was looking up to the 50 moving average to provide support, and now it closed under that. So short term, I definitely think there's going to be further downside. Although, as I just said, I don't think it's necessarily indicating it's going to break 1040, okay, and going a lot lower. There could be something else, and we will see the other options as I go through the other charts. But sticking with the most bearish scenario for gold, we would take this as 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. That'll be 1, 2, and then a meltdown through 1000. A meltdown through 100 here on the GLD, taking us into a third wave, and that would almost guarantee that gold is going to continue with a downtrend for beyond the break, beyond the break of the 1040, it's going to continue for at least another year, if not two, if not more. So that will be in itself an extremely important signal for those who want to trade gold from the short side. So bear that in mind. That's a long-term projection. Now this is platinum, and this is another pattern that I'm afraid is quite bearish as far as the precious metals, the metals, are concerned. Short term, it is definitely pointing to further downside. Yes, it is definitely pointing to further weakness. We're not talking about 1 or 2 days. We're talking about several weeks, if not several months. And the general pattern that I've been working here in platinum, that's the monthly. The surge from the base building that we have seen here, which was very similar to the surge we have seen in gold, taking us to a spike top here in 2008. That is potentially the end of a third wave, giant third wave going up, and now we could be looking at the fourth wave. Could be looking at the fourth wave, of which we have seen most likely an A, and then there is a whole range of interpretations here. Now you don't have to follow every single alternative. You will see that the crux of the matter really resides in the price action since the beginning of December last year, and it is so decisive and very bearish. It is very bearish that it almost guarantees that we are going to check the floor here at around 800. Okay. Now, even if you don't fancy going through all that, as I say, just focus on what's happening here. That's already plenty to go by. But if you like to extend your vision and include some of the potential here, take a look. That could be an A, that's a B, that could be an A, B, C. That will give you a C in green. There is definitely a case for arguing that we have seen an ABC here since their bottom in December last year. So that could play out as a D, and we could be coming down now in another huge ABC that will go down towards 800, but that will be the E. Okay, and the E could extend, meaning it could extend in time, not in price. It will go down to 800, but it will keep bouncing up and down here for maybe 1 or 2 years. Definitely possible. Definitely possible. And then the fourth wave could be ready. And then perhaps also gold and silver will be ready, with gold finishing that giant ABC that I've just shown you on the GLD. And then we could witness a spectacular bull market in the precious metals, in metals in general. Okay, this is again a long-term projection. There is, however, another twist that I would like to introduce here. If we look at A finishing here unchanged, the B actually finishing here, you take the first slide here as a 1-2, down you go in 5 legs, you have a third. What's going to happen here is a fourth wave. Okay, it may have terminated already, or it might still be ongoing, and then it argues for a break of 800. Okay, argues for a break of 800 to platinum and going a lot lower. I will stop there because I really want you to focus entirely for trading purposes and for the purposes of our analysis relating it to the price action of what's going on in gold and silver. I think it will be more than enough to focus on what's happening here. And in fact, I was not accurate when I told you the bottom struck in December. That was the bottom in gold. The bottom here was struck in January. Okay, I don't remember all the different figures by heart, but you can see it on the chart here. And what is abundantly clear and cannot be submitted to any discussion is the fact that this is a 3-leg move. I don't think anybody can argue that you can see here 5 legs. If you think you can see 5 legs here, please write to me and show me which interpretation you think would be appropriate to indicate that you have 5 legs here. There's absolutely no way in the world that I can see 5 legs here, and that is very bearish, because that says that if you have ABC here, it is very likely that if the breakdown here is indicated as indicated 5 legs, I'm showing you here, is correct, then this is an A or 1, and that's 2 or B. If it's not finished, it will just go sideways for a few more weeks. okay, but that is in essence very bearish, and that argues that at the very least we are going back there. Okay, we are going back there. And why do I say at the very least? Because there is always the option that the fourth wave could still be ongoing. That'll be your ABC, that'll be your ABC, it'll come back. Oh yeah, it'll come back and it'll keep doing that. Okay, that's why I say we go there, but we don't know sorry, we don't know if the selling force is going to be so overwhelming to continue to push platinum even way lower than 800. We will of course know as we come down. We will be able to ascertain, I suppose, a degree in the ability of this market to correct or not. Now let's go and see the daily. This is the wave count that I take as 1, 2, 3, 4, A, B, C, D, E. Okay, 1, 2, 3, 4, 5. If that's correct, you got your ABC here, potential ABC done, and that's the breakdown that appears to me to still have quite a bit of lease of life on the downside. Okay, things will heat up here once it breaks the floor and it corrects short term under this support. Then you can start preparing for selling short platinum with two hands. Okay, that will be a 1, 2, 1, 2 sell. Spot gold. That is the monthly scale of spot gold. Now, echoing the pattern that I've shown you in the GLD, what could take place is in the spot gold itself, that will be taken as an A. It's actually one of the options that I did discuss in the past, but we didn't take it as a priority, as our favorite wave count. But I think given what happened now on Friday, and if we continue to break under 1200, we have to definitely assume that the test of the floor at 1040 is coming. Now again, I do not necessarily sign on the idea that the 1040 is going to break immediately. As you can see, I'm giving him the option of the B that could still extend, meaning even if I get this right and this is an A and that's an ABC, the B did not necessarily end here. It could be that you would still have some sideways price action here that will see dragging on for months and maybe years before it will break down. But as I said, in the case of platinum, when we come down, if we come down, break under 1200, we will be able to judge from the price action, the speed and the length of the corrections, etc., whether it is really on to the big one that's going to break eventually 1040. Okay, so this is the general trend, if you like, the big picture for gold at this moment as we are talking. We'll go now and see the weekly. And of course, the disappointing thing is that it broke the 50 moving average on the weekly. There is still the support coming at 1200, but the pattern I'm showing you here is suggesting that there is quite a strong chance that in fact the 1200 is not going to hold. The only thing that could salvage the bull in gold and silver is the following pattern. That this is still maintained as 108, okay, that this is 5 legs that would lead to further move up. This is still not to be excluded. Please bear this in mind. It is not to be excluded, and there is a strong argument why you should consider this as a viable option, because right from the beginning here, we do not have, if you like, a classic build-up of 1, 2, 1, 2. It looks like a mess. It looks like a complete mess. It looks like basically a series of ABCs, as I'm showing you here, ABC, and that could easily be taken as an X, which opens the door for this slide to be the beginning of another ABC. So please bear this in mind. This is not looking like the classic beginning of a huge breakdown. It does look corrective. And just for this reason, you have to assume that there is still a fair chance that despite violent fluctuations here, it could actually come back. Yes, either as a third wave or as a C. Okay, so I hope I don't have to repeat it many times. If the region of 1170 is holding, as you can see here, this region is holding, it comes down, it rebounds back into mid-range 1250 or so, you have to assume that there is stability here, and you have to assume that the chances are not dead that it could still come back and fly. Absolutely run. And in terms of the very big picture, of course, there is an alternative that could accommodate that. But what is more important, very short term, what you see here is arguing that what we have in hand here is corrective. Now let me show you the daily here. And we have taken this as an ABC, there is no change. I'm going to take here the violent price action, which was quite difficult to put together as a pattern. Yes, to accommodate it in a pattern. I would take this as an X. I don't see what else I could do with it. At this point in time, I'm taking it as an X. I take the drop here as likely A. I think we go sideways, we stay under 1260. We go sideways, either as a triangle or just a series of ABCs, and I would expect another drop. Okay, I would expect another drop potentially as a C, and then we'll see how things develop. If it does break under 1170, the bottom line here, and it heads towards 1100s, obviously I don't think we're talking about a speedy recovery. Yes, at most, if it goes down towards the floor and it doesn't break the floor, at most I would say you should be looking at this as a best scenario, okay, which would basically be market, very boring market for many months, and eventual drop. I'll show you here the 60 minutes. Very impulsive price action. I will leave it unlabeled at this point, but this is indicating, as far as I can see, that there'll be further falls. Now here's silver. In the case of silver, I presented the idea that we could work with a series of ABCX, ABC, and if you remember, we were talking about an ABCDE right here, and that was taken as a 5-leg run. That could be an A, could be a B, we could witness a C here, or if we launch onto a major new bull market, that is U1, that could potentially still be 2, will go up in a 3, 4, 5, etc. Everything is still alive. Everything is still alive. All the options are still there, despite this massive shakeout on Friday. In the case of silver, the 50 is still below the price. So despite the fact that it broke this very important support level that you see, support line, and broke through the black line again, the 50 is still there, and is keeping hope alive that could play out as an ABCX, and we will see just the completion of another ABC, and then it will come back. So it's not dead. Keep that in mind. It is still possible. That is an ABC. That's your X, potentially with an ABC right here. Okay, and that could play out as an ABC. And anytime you see it coming back, I mean breaking like that, coming back, settling above 19, that will be hugely bullish. Okay, definitely hugely bullish, and very much a sign of strength, signal of stability, and likely a preparation for an attack onto the previous high. Okay, sinking under 15.5, bad news. Bad news again, not necessarily immediately arguing for a crash under the low that we have seen in December, but in the best of circumstances, I would imagine sinking down low here would see it crawling on the black line, the black support line that you see here, for months before it will eventually fall.